Just when I said we had a wide open week ahead of us, and bam, Chinese trade data spooks the markets after midnight. Moody's downgrades the regional banks, and all hell breaks loose and markets collapse here. Boy, never a dull moment, right? Especially this summertime season. But you probably noticed we got a pretty good reversal off, pretty good bounce off the lows here this afternoon. Is it time to buy the pullback and trade this squeeze back into the range above? Or is now a great time to short the bounce and another leg going lower for tomorrow? I have some really simple tricks we'll talk about tonight that will tell us whether or not it's time to buy this reversal going higher, or whether or not this is setting up for a nice juicy pullback and a short back down to those lows. I get some great trades, both long side, short side trades we're tracking for tomorrow, and I'm going to go over my favorite trades in the video here tonight. Then we get a game plan to make some money on Wednesday. Now, before we jump in and get our hands dirty on these charts here for tonight, make sure you subscribe to our channel. I don't want you to miss tomorrow night's video. And if you like these videos tonight, do me a favor here. Will you hit that like button for me? Give me a shout out down in the comments section. Still haven't heard from you down in the comments, right? Hit me up in the comments. I'm kidding with you, though. All kidding aside, though, let's get the intro out of the way. Let's get ready for Wednesday. Hump Day should be a very fun day tomorrow in our trade room. Boy, everything's pretty bearish right now. You probably don't need me to tell you that, right? Everything's pretty bearish right now. We got bear market on the S&P, bear market on the Nasdaq. We have a bear wedge on both markets, S&P and Nasdaq. Now, anytime we have a wedge going on, that always tells me there's something coming. Something's coming, and we'll talk about what that something is here in a moment. So we're pretty bearish, but I'll tell you though, we're still sitting on major levels of support below big time trading ranges up above us. So this definitely ways for us to buy this thing on a squeeze back up into that trading range. And I certainly think there'll be some short trade opportunities here on the way down off the top of these wedges. Again, I'm going to talk about a couple key tricks we'll talk about tonight to know whether or not we're going to buy the squeeze going higher, or whether or not we're going to sell this rollover right back down to retest low. Now, later on in the video, I'm going to drill down to some tick charts, right? We'll start off tonight on the 60 minutes. I'm going to drill down to some tick charts, though, here in a moment, and we'll talk about some specific entry tactics and how to know whether or not we should be buying or selling this market here for tomorrow. It's going to be a great video, a master class on using momentum and the moving average, right? So make sure you stay tuned on that. Now, before we go into the charts here deeper and talk about my favorite trades and the tricks I'm going to use tomorrow to find the best entries and exits, let's double check the calendar for tomorrow, because I do want to make sure you guys are aware of this. There's no major news in the U.S. session tomorrow that applies to the Emini and the Nasdaq, but there's a lot going on with China. We heard about last night, right, just after midnight last night, China reports a very dismal trade balance report. That got things selling off, and then, of course, Moody's piles on. I'm not sure who this guy Moody is, but he was in a pretty bad mood this morning, apparently. All kidding aside, though, two things you want to be aware of. One, we should be hearing from China in their CPI number between 10:30 and 11 o'clock Eastern time here for tonight. It's not showing up on this calendar in front of me, but we've got the CPI number. We get the CPI in the U.S. coming on Thursday. We're going to hear the CPI number coming out in a couple hours here tonight. That, of course, is a huge variable that we have no way of knowing what's going to happen, how the market will react. It's a big variable for tomorrow, right? That makes our job a little more difficult. The second thing, and this is even more of kind of a known unknown, is supposedly we're going to be hearing about some executive order out of the White House. Apparently, Joe Biden is going to be announcing some investment restriction to China as well. I haven't heard much about it, but we're now hearing rumors, though, that at some point tomorrow, maybe Thursday, we're going to be hearing about some executive order, and who the hell knows how the markets will react to that. So it seems like everything is revolving around Chinese data overnight and potentially tomorrow as well. That makes our job a little bit difficult, but that's okay, though. We're up to the challenge. We'll put together a good game plan, and we'll roll with the punches here tomorrow. I also want to make you guys aware, too, there'll be no video newsletter tomorrow night, right? So no video tomorrow night, unfortunately. Hate to leave you guys hanging. Had a CPI number coming on Thursday, but be in our trade room. We'll be trading together all week in our trade room at 8 o'clock Eastern time. So Chinese data is kind of the big variable here overnight here. Now, back to our chart charts though, because of course the money is made on the charts here right now. Let's go over my favorite trades here for tomorrow. We'll start with the E-mini and the SPY. We'll go to the Nasdaq and the QQQs. Let's go into the E-mini first. We'll wrap things up here on the Nasdaq and the Qs. Most important thing right now we're still sitting on quite a bit of support right now with a range below us. We're very bearish, right? There's no doubt about that. We got a bear wedge coming down here. What is very interesting though is it's difficult to trust this bearish move down today because of two things. One, it was all based on downgrade from Moody's, news out of China, and two, it pretty much reversed the entire move here this afternoon. So we kind of find ourselves in a very similar situation we found ourselves in just 24 hours ago. We're at support, nice strong bounce off the low. This trading range, of course, is going to want to rotate higher and take out some of these highs here overhead. I like the idea of being a buyer for that rotation going higher, but you can definitely see though, right? That wedge is a big problem that we have overhead here. And so I do want to be aware of that and be ready, right? Be ready for shorts on the way back down. I think there's probably money to make on both the long side and the short side here for tomorrow. Let's talk about this now. Let's go to more detail on the tick charts. Now, tick charts. I use tick charts to find the best entry setups in our trade room. This is a 7,000 tick chart. I think tick charts make everything easier. Entry levels easier, entry setups a lot easier, trade management hell of a lot easier. This is the 21 EMA, by the way, as well. Very important indicator that we use every day in our trade room. What's the most important factor right now on the E-mini S&P? Again, you can see we have that big drop, right? That big drop, right? The Chinese trade data comes out, Moody's piles on, right? Anyways, the most important factor right now is this is a very strong reversal off of that low, right? You can tell it's very strong because of the separation we get off the 21 EMA. See how the bears get separation away from the 21 EMA right there, right? You'll notice the buyers have similar, right? So buyers have control of this momentum. At the same time, right? At the same time, and you'll notice later on tonight, the Nasdaq does not have that similar reversal. So Nasdaq looks a lot more bearish. I don't want to spoil the fun later on in this video, but right now, though, buyers have a nice strong run. Now, whenever we have a strong run like this, we always like to look for that two-legged correction that I talked about in last night's video and a retest of that high. So we have to think right now the buyers would love to get a pullback, right, and buy a pullback for at least a retest of this high right now. I also think it's very possible here, because this whole move down was based on news today, it's very plausible, and of course with Chinese data coming out, CPI data coming out a few hours from now, it's very plausible here right now that we squeeze going higher. So I definitely want to make sure we're ready to capitalize on that. And of course, if the market reacts poorly to the CPI number coming out, I also want to make sure we have a game plan to short this thing, right? To go back down to retest that low. Right now, the buyers have all the control of short-term momentum, but that could easily change, and I want to make sure you know how to adjust to that and make some money on that as well. All right? Now, first of all, if we end up going higher, there becomes a lot of FOMO that comes into the market, right? So if we start running higher here, there's one thing on the mind of these buyers, right? That's to get in before we take out that 45, 41, right? 45, 41 and 3/4 high here. The setup that you want to look for if we start to squeeze overnight is going to be what's called a trap setup. We have to be trying to get in as low as we possibly can. So if news comes out in Asia, or if we just start squeezing and starting to rip going higher here, we'll be buying as low as we possibly can, that we're not buying into that high. And the way you do that is what we call a trap pattern, right? You guys are learning about this in our free trading classes, right? So bear trap on the way higher. Notice how it's drawn. Higher high in price, trap below that low, all right? That's the setup if we go higher. Now, I think we all can hope for the pullback. Now, we talked about this quite a bit last night on the video, so I'm not going to go into a lot more detail, but what you want to do is think about, and this could also be going higher and then pulling back here as well, right? So the pullback. Whenever we see a pretty big move like this, we don't want to buy too low, right? Buy too high, want to buy nice and low. Usually this will be what we call a two-legged correction. Okay, and the way you want to think about this is a measured move, right? So one leg, two leg, and this will usually go a little bit further than that 100% extension, or an ABCD, right? Or a measured move. We call them measured moves in our trade room. You guys are learning about these in our free trading classes. What I'd like to do is get that two-legged correction, that two-legged pullback, get down into the low of this channel and trap the bears in underneath the moving average and use what I call a failure into pullback combination, right? The goal of this, again, is with that momentum going higher, the goal is to go back and retest that high. If I can get the sellers to come in and try to short this thing into the low of that channel, I can use their stop losses, right, as fuel with what I call a failure pattern setup, okay? Then as we're going higher, I'm looking for that first pullback off the low. We call these pullback setups. Put these together, you see a lot of failure into pullback combinations, right? It's part of the price action cycle. You guys are learning this in the free trading course, which reminds me, by the way, if you haven't taken that free trading class yet and learned things like the bear traps, if we go higher, these failure into pullback combinations, if you're not making consistent money right now, these markets are way too good not to be doing well right now. I'm going to put a link up there for you in the upper right-hand corner. Grab that link, take that free trading course, because the strategy that I teach in that short video series will teach you a simple trick that we use every morning in our members trade room to know exactly where the best winning trades are going to be that day. And on top of that, I'll help you start making money on your own with 4 of my favorite entry patterns. It's all taught in that short video series. If you're sick of missing the best trades each day, if you're not getting good results, grab that link, take that free trading course. You can thank me later. That strategy will get you on the right track here. Also, too, I'm going to put all the important links here. Anything we talk about tonight, I'll drop the links in the description of the video. So if you can't get that pop-up, just be aware of that. It'll be there. All right. So now we know, right? Now we know if we grind up, right? We now know on the way up, right? It's going to be what? Bear traps on the way up. And then again, get underneath the moving average. Two-legged correction. Remember, it's usually going to be a little bit more than a measured move, right? A little bit more than a measured move. We're not going to pick the bottom, right? We're not picking bottoms here. We're waiting to see if these bears try and bam, right, back up into those stop losses, okay? Now, I'm sure some of you guys and gals who are watching here tonight are wondering, okay, so we talked about this bear wedge, right? All right, so now how do we short this thing, right? How do we short this thing? There's actually a pretty easy way to short this market. Remember, though, whenever we're going against a strong move like this, the initial short trades are going to be smaller position size, right? Because momentum is very strong right now. There's one type of entry pattern that we use to short a bull market, and that, of course, or a bullish move like this, and that, of course, is what we call a crown reversal pattern. Now, please make sure you pay attention to this one. I get a lot of emails each week about this, people who are not using this correctly. Notice how I draw this. As we pull back, the buyers will try to take it higher going once. Okay, they'll go lower. They'll try going higher again. And we'll get a nice juicy signal. This ultimately is wrapping together what's called a two-try failure, which you guys are learning in our free trading course, along with a bull trap, right? You put a two-try failure, right? In other words, buyers once, buyers twice, lower lows, right? Got to be lower lows. Buyers want to buy low. You put a two-try failure in combination with a bull trap, right? Lower low in price, trap high. Again, you guys will know this if you're taking that video series I mentioned earlier. That is called a crown reversal. I want to make sure I sell as high as I can. Now, as we start to pull back here now, right now, let's say we pull back, and this is now where we're looking at that. Remember that 1-2-legged correction? This is now where we trap those bears in. We get those bears and we use our stops, right, as fuel for that punch going higher off the low of that channel. Well, hold on, right? At what point do we know that this should not be bought? Well, here's the giveaway. It's a really easy one, too. These type of situations will almost always begin to grind down like this, okay? And that grind is the giveaway that buyers are walking away and they're bailing on this, and it'll allow the market now to drop like a rock. These are very, very easy, okay? Watch how I do this. I'm going to start looking for a trend line to connect at these lows. All right. Oftentimes it'll be off these big swings or right off those lows like that. Once you get that trend line on, now pin it up around these highs, okay, and go looking left and find prior swings. In my experience, that's where the best entry will be. Again, it'll roll over or it may shoot lower, right? It may shoot lower into a grinder down, right? Okay. We don't need to get a crown reversal off the high. It may simply shoot lower and begin to grind down. But once you see that grinder, once it starts grinding down, bingo. Now we know exactly how to find the levels we need. So we draw off the low, we pin up at the high, and I love traps, right? You guys know about me. I love traps. I think traps are the best ones to trade with. But this could be any of the entry patterns. It could be a bull trap, like I'm showing you right here, right? We might get up above. We might get up above the moving average. Buyers try and fail for a failure pattern, all right? So whichever of the entry patterns we get off the top of that channel. Now, where would the targets be on this? I think a very reasonable target is off the high of that trading range. Markets love to break out pullback, and we'll talk more about that here in a moment on the Nasdaq, right? Because Nasdaq's right in the meat of a breakout pullback right now. But I think that top of that range is a pretty good idea for a target. I would normally say back at that low, but oftentimes what happens is when you get these range breakouts, we saw a range there late in the morning before that big reversal. Oftentimes what will happen is they'll go back to that range, right? And it will bounce, right? It'll bounce hard, right, off of that trading range. Now, could I buy that? Right? Could I buy that reversal off of that low? We definitely can, and I'll talk about this a bit later on in the video. All right? I think that reversal off that low could be one of the easiest trades for tomorrow if we're lucky enough to get it. I'm going to talk about that more though on the Nasdaq. All right? I'm going to make you wait for that a little bit longer. Right? It fits a little better on the Nasdaq, and keep the video going for us. Okay? So now you guys have a good idea here now about what I'm looking for here as we go. If we keep running higher, if we squeeze going higher, it's traps. Right? Look for that two-legged correction. Don't pick the bottom, right? We don't pick bottoms because look what happened today, right? Look what happened today. We don't pick bottoms, right? We wait for the proper setup. We trap the bears in and go from there, right? This is why I'm not a big fan of picking tops and bottoms on these, because we wait for the setup, in this case, trap the bears in and use stops as fuel. If this thing starts to 1-2 bull trap back down, or like I said, right, with that potential wedge overhead here, if this thing shoots and begins to grind down here, easy. Find that low, find that high, right, and go looking for that first test off the high of it. And we're using this range, right? Ultimately, that range is the big magnet for us. And then, of course, we'll talk about the bounce here, how to buy off of that low for tomorrow. All right, guys, I think we've covered pretty much all the details. The only other variation on this would be a trading range, but really the range itself doesn't really change a lot. If we do go sideways here overnight, that range becomes a magnet, and we're ultimately looking for levels of support below the range, and we're going to use very similar, right? Use that failure pattern, right, off that range low. If you guys are taking my free trading classes, you know how to trade this one. This is a pretty straightforward one, right? So if we do go sideways here, that range becomes a magnet, and we start looking for bear traps ultimately, right? Failure patterns off support levels underneath that trading range. All right, let's keep the video going. I talked a lot about this last night on the video, so if you want a masterclass on trading ranges, definitely go back and watch last night's video. I know it's 24 hours old, but it'll give you a more in-depth breakdown of ranges, because I can't cover it all here right now on these videos. That's okay though. Our trade room's a great place to trade some ranges with us. How about some Nasdaq? How about some Nasdaq right now? Now, Nasdaq, really at kind of first glance right now, Nasdaq is kind of the same thing, right? There's a lot of similarities here on the NQ. There's no doubt about it, right? We're bearish. There's your wedges. Now, wedges usually tell us, right, something's coming. And what I'm leaning on right now is we got the CPI number tomorrow from China, but I wonder if this wedge is kind of a symptom of the markets kind of lingering out there, a bit of anxiety over the investment restriction announcement that apparently is coming out sometime this week out of the White House, right? Wedges usually mean there's emotion involved. The markets are kind of spooked by something, and anyways, so the most important thing right now is we're bearish, clearly on the 60-minute chart right now. But what you might notice is we now have finally completed, there's the range. This is that big July range, right? We've now completed that pendulum swing. So that's a really interesting clue here. And again, it's very difficult. It's very difficult to trust this move down today because of the two reasons I mentioned earlier. One, it was all based on that spook of news overnight. And two is almost all of it rebounded, right? So it's very difficult to take that big move down that seriously. So we're sitting at support. We've got a bunch of ranges. Ranges act like magnets. So range above us, range above us. Again, I don't think anybody would be surprised if this thing reversals and goes right back up and takes out some of these highs here, especially if the number, the CPI number makes the markets happy for tomorrow. But at the same time, though, I have to be prepared here, though, right, for that short, right, and keep this thing going lower here to finish off that wedge here. Let's go down to the tick charts now. Okay, the tick charts again. Now, here's a very interesting difference between the S&P right now and the Nasdaq. Real quickly, let's go back. I promise, real quick. Let's go back to the S&P, and I want you just to look at this split screen right now. Okay, and what do you see the difference here right now between these two charts? Okay, what's the key difference? Separation. Right now, I use the word separation. You notice how the buyers, right? See how they're getting off the moving average right there. Right? It's such a strong run higher, they're not even pulling back to the moving average. That is what tells you in most cases, right? It's summertime trading. There's a big CPI number overnight. Who knows, right? What's gonna happen tomorrow? But in most cases, when you see a strong move like that, you're pulling back and retesting the high. But that's not the case on the Nasdaq, right? The Nasdaq is definitely not as convincing. I would say the Nasdaq still kind of feels like a bear market right now. Right? Look at that strong run down right there, right? Strong run down. Anytime we see a strong run like that and the market grinds, for all you old school traders out there who still look at flag patterns, right? They're kind of an older style of trading, but this is almost like one really big steep flag, right? I know it's pretty steep to be a flag, but right, that's kind of what I think about when I see something like that. It's a really steep flag pattern. It's not getting too much separation off that moving average. Now, that's one clue. The second clue is look where we are in relationship to that trading range. If there is one thing you learned from me the last few weeks here, it is that ranges love to break out and pull back. So that was the range. This is kind of the edges of the range, we call it, right? We get that breakdown, and now we're right there, right? So again, the clues we're seeing right now, they suggest this Nasdaq's going lower, right? Back to retest this low. Now, again, I don't know how the market will react to the CPI number, right? If we can crack through this area now all of a sudden, there really becomes almost a vacuum effect as we now try to make our way back up into that trading range. So this really, you could definitely say right now we're certainly bearish. We are on resistance here, and we're not seeing a lot of evidence right now from these buyers around the moving average. Now, if we start getting like on the S&P, right? If this thing opens up in Asia and we start kind of accelerating, going higher here, okay, now we know, right? Now we're trying to run back up to retest the high. Obviously, all things equal, we don't know how the CPI number will come out. We don't know if we're going to hear from Biden tomorrow. There's a lot of variables on that. But again, take those out of the equation. If this thing starts to squeeze going higher here, we're now flushing our way back up to take out that high. And so now it's a race. It's basically a race to find a way in, right, and getting those bear traps. Okay. At the same time, too, right, as it goes higher on the way up to that level, this again is we start looking at, okay, find a larger channel off the high, bring it down off that low, and then this is exactly where, again, right, exactly where that two-legged correction comes in, right? Remember, a little bit more than a measured move. Trap those bears in under the moving average. This becomes a strong move now, and we should be looking for a retest of that high. So at that point, again, same basic game plan we talked about on the S&P earlier. So if we do keep going higher here, right, it's on, right? Now it's on. Now we know we're cracking and holding above areas of resistance. Now, how would I short this thing though, right? Because right now, it definitely, from what we know right now, it smells like this market wants to go back and take out that low. And I do think there's going to be potential buying opportunities off the low of that trading range. I talked about earlier, whenever we're trying, this is not a reversal yet, what it feels like at least. It doesn't feel like a reversal, right? It's a pretty big bounce, but it's enough momentum now for the buyers, right? That's a lot of momentum now for the buyers. And we have to think they're going to try to keep this thing going, right? So in order for us to short this, it's that same game plan, right? It's that crown reversal. It's basically a bull trap, right? I want to short that crown reversal, and I'm obviously drawing it up right now, right? It could be a different variation of that, right? It could be one like that, two like that, right? But you want to look for that crown reversal. Okay, nice strong signal candle for the signal, right? Remember, we're not blindly selling that top. We're waiting for a good, strong signal, right? So if it rips and runs higher, okay, now it's on. Find that channel, do like a correction, right, and back, right, and back up again. We're waiting for that crown reversal. If this was to again kind of pop and grind down here, right? Same idea. We know where the market wants to go, wants to retest that low. Find that channel, or find that trend line, mark that channel. And again, I like traps. It could be any of the entry pattern. I think traps will be the ideal here because traps by definition are going to allow us to sell as high as possible. Right? We talk about that. It's one of the biggest benefits of trap patterns or trap setups is we can sell as high as we possibly can. That we're not selling too close to that low. So crown reversals and bull traps, right, on the way going lower. Now, let's say now we go all the way back down and retest this low. This also applies to the S&P. Now, what happens down here? Well, we have to think in terms of, put yourself in the shoes of the sellers. The smart sellers are going to sell high, and they're going to be taking their profit where? At this low. So who will not be trading down here? The smart money. Right? The smart sellers, right? The experienced sellers are not going to be selling into that low, at least not unless we see some huge number come out overnight and everybody, right, panics. Who knows, right? But all things equal, right? When we know right now, these are going to be rookies selling down here, right? Professionals will sell high, and right when those bears are getting out of their positions, this is where you can trap bears in with what I call a two-try failure pattern. Now, I call these double bottom reversals, right? Because all you're basically doing is you've got that strong run down. We're looking for an entry now at that low, right? Basically a double bottom. Okay. Now, remember, great location to be a buyer, right? We're at support. Great location to be a buyer. But what's not so great? Momentum. Right? Momentum is very bearish in that situation. So again, we're not going to just buy the bottom, right? Not if you like money, right? You want to make sure you wait for the signal. Now, one of my first mentors would always say, JJ, think about a place where everyone is buying. Okay, and this is the situation you want to look for. It's very easy to make money if you can be buying when everybody's a buyer. Now, we assume that buyers are buying off the low, right? If anything, right, the bears who are getting short up here, right, they become buyers down here. So buyers are buying down here. But if I can now rope in the sellers, get them to try once, get them to try twice. Now, why twice? Why twice? Because again, we're so bearish, right, regarding overall momentum. But if we can get those remember, these are rookie traders, right? These are not professional traders who small accounts, tight stops, right? A lot of them will flip their positions, right? Reverse their positions, right, when it goes against them. So this is where if I can get those bears, those rookie bears, those inexperienced bears, right? The sucker at the poker table bears here, if I can get them to commit a couple times, I can then use their stops. Now think about what that means. In that situation, if I can buy into those stop losses, everyone is buying, right? Think about this. The people who sold short up here, they're buying their way out. They're taking their profit, at least a big chunk of it, right? The buyers are buying because that's what buyers do. They buy low, right? And now all of a sudden, right, the rookies come in, they get smoked, and the only way out of a short position, right, is to buy your way out. Everyone is buying. If you can find situations like that, it's difficult to lose money. We're not making predictions, right? We're not picking tops and bottoms. We're waiting for proper situations where, bam, right, we can trade into stops and run this thing back higher. Now, at this point, if we get that stop run, we know where they want to go. They're going to want to go right back up and take out that high. And it becomes pretty easy at this point now. If we do get that squeeze going higher now, we now go out and watch close closely here. This is a very simple trick. You want to learn this. As it reverses going higher here, don't worry about trend lines, okay? That's usually a waste of time. Draw the channel off the highs like this. Bring it down, find that channel like that. See how I do that? Draw it off the highs first. That's pretty much all you have to work with, right? So draw off the highs there, bring it down, find that channel, right? Look left, and again, I love traps, but I love that first test off of that low. Markets will oftentimes double bottom and begin to flesh out this area. And who knows, right? Thursday CPI number, right? This may be fleshing out a big range here for tomorrow. That's a 2-try failure, right? And a first test is the best test off the low of that channel. Could be a bear trap. This one could be a seller failure pattern. Could be a pullback combination. You guys will learn more of those inside the free trading course. All right, guys? Now, right now, at that point, if they run back to this low, if they hold that pullback and they blast going lower, that's a breakout, and we'll tackle that. We'll tackle that bear tomorrow morning in our trade room, right? They may not fail right at that low, right? If they run through it and keep going, okay, that is a more advanced game plan. We're going to flesh it out tomorrow morning in the morning trade room. All right, guys? All right. Game plan is ready. We're ready for no matter what this market throws at us. And remember, it doesn't make any sense to make predictions, right? You know, I like to make predictions on these YouTube videos, right? The algorithm loves it. But in all reality, be ready to trade no matter what the market throws at us here tomorrow. And, you know, get a bunch of news coming out overnight, maybe some news tomorrow out of the White House. I'm sure the market will throw us a couple curveballs like it always does. But if it's one thing about our trade room, we'll roll with the punches, we'll go with it, and we'll usually find some pretty good trades no matter what the market throws at us. Now, our trade room opens up tomorrow morning, 8 o'clock Eastern time. You'll want to be there learning this stuff and trading right along with us. I'll put all the important links. I'll put membership links. I'll definitely put the free trading class links. All the links you guys need, the description of the YouTube video. If you want my opinion, my advice, start with the free trading course. Learn the basics, see how it works, right? Get some momentum on your, at your back, the wind at your back with that. Get warmed up. That would be ready to trade with us sometime soon in the morning trade room. If you got questions or if you're having trouble getting into our free classes, please don't be afraid to call the office or use live chat. All right. I promise I don't talk this fast on the telephone. So don't be afraid to call the office or send us an email or use live chat. We'll make sure we get you all the answers that you need to your questions and help you get access to anything that you're missing out on. All right, guys, thank you so much for watching here tonight. A fun day today. Today was a wild start to it, but I finished up the day pretty well. I know a lot of you guys made some pretty good money on that reversal too, so well done on that. But let's get a good night's sleep. Back tomorrow morning. We're going to keep this party rolling. I'm going to miss you guys tomorrow night. I apologize to leave you hanging before CPI on Thursday, but it's that time of the year. I got to get some stuff done in the afternoon, tomorrow afternoon. But tomorrow morning, though, 8 o'clock Eastern time in our trade room. Be there, or we'll see you guys on Thursday evening and get ready for a finally Friday session on Friday morning. All right, guys, I'm out of here. Be well. Be nice to each other out there, will ya? And be here next time. Adios, amigos. Bye-bye for now.